Hi guys, this is Dr. Sadasivam once again with you. I think you would have seen the market on Friday, and that was one of the biggest single day gains. Whatever I am talking about is about Nifty, and after 5 weeks we have been witnessing low. Everything it has struck that losing streak, and the market went up, and probably because of reliance and some financial stocks, with the only exception of IT. All the other sectors have improved quite a lot. In fact, if you look at the whole of last week, we are talking from Monday to Friday, it has been quite a snappy week, because whatever has been a downtrend market in the last 4 weeks, the last week it has gone up, and whatever fall happened on Thursday, all that has been compensated on Friday, right? Even metals, like we have been saying, whether it is all the sectors with the exception of IT sectors, all these sectors, I'm talking about Friday, not Monday, I'm talking about Friday, right? Because we are talking about Nifty, because Nifty is a combined indicator of all the other stocks, all stocks, your mid caps, small caps, all those companies, except for diagnostic companies had gone down, like for example your looping and other companies have gone down. We will talk about those things later, so we will not get into that. So now if you see, lot of things have happened, but one thing you must remember, it's very difficult to work with such big volatility. May 12th it was 350 down, on 17th it was 400 points up, on 19th of May it was 431 points down, and if you look at 20th of May it was 457 points up. But in this kind of a market, how will you play the market? How will you plan? How will you invest? What will you do? There's a lot of confusion. It is not just in the Indian market. If you look at the whole world market, it's becoming choppy and choppy day and day, right? So whatever has happened in India on Friday, let's look at the international impact, because there are rate signals coming from China, and there have been rate cuts, which clearly indicates that the government wants to save the property sector, because property sector is one which in the economy you have various sectors like metal, cement. It will be able to save all those sectors. That's the strength of the realty sector. Secondly, in US there is a slowdown which is happening. The inflations are going. That ghost has not gone away, and I was always been saying that balance sheet expansion has been doubled, which means from 4.5 trillion the balance sheet has been expanded to 9 trillion just after Corona, just to save the country from recession. So whatever effects we are seeing, the big earthquakes we are seeing, it is nothing. It is, they are talking of 60-70 billion dollars. $70 billion means the whole year it's somewhere around 800-820 billion. Even if you presume it is 1 trillion, it's only 10%, because balance sheet expansion in the US went up to 9 trillion. So in 1 year, if you take out 1 trillion, what is it? It's just 10%. But that is creating such tectonic shifts in the stock markets throughout the world. But once they get into 2030, what kind of an impact it may create? On 17th, they had a FOMC meeting in the United States. What they are saying is they want some kind of a soft landing, and that they call as a best case scenario, because they admit that there is a problem. They are not saying problem is not there, but they want a soft land. But in case soft land doesn't happen, then it will get into recession. Remember what happened in 2007, recession. We all remember that. But there are certain positive things which are happening. If you look at the markets today, the markets have learned to survive without the help of the government. Once upon a time, whenever there was a problem in the market, the government will come to its rescue. Like in Mahabharata, Lord Shri Krishna will come to you. Likewise, whenever there is a problem in the market, Fed or some government agency will come. But today the market is going on its own. They have thrown their crutches around and it's operating on its own. Now, fighting inflation is one of the most important priorities, while at the same time growth has to be maintained. Now, we don't think it's a US problem, though we are talking about it. Whatever problem happens in US, it has its implications throughout the world, highly correlated. Now, if you look at S&P, it's gone down by 10%, and 10% fall is not small, right? So every day, if you see, some day it's going up, some day it's going down. Today, once upon a time, 450 point movement in Nifty was a black swan. Look at the last 1 week. I've shared the figures, right? From 10th to 19th of May. 457 on May 20th. On May 19th, it was 31 points down. And just 2 days back, that is May 17th, 417 points up. May 12th, it was 400 points down. 400 point movement going up or down. It used to be black swan even, but today it's become a very normal thing. Today, if you say 300 point movement, they are saying, what happened? It's become very normal. Like every day the newspaper comes home, the doodhwala comes home. So therefore, the markets have also learned to survive with this kind of volatility. But one thing we can expect, that this volatility will continue to remain for some more time. The VIX is reaching 23, 25. Now inflation is on the increase. Now there is another fear, which is growth fears, whether the companies will grow, whether the companies will make profits. Volatility will, of course, will be there. For the last 1 week it has been there. That does not mean it will continue for a lifetime. But the problem is the growth concern is what I am talking about. Ultimately, when you talk about share market, wherever earnings, where do they come from? They come from fundamentals. Sentimentals, they can go up and down. Sentiments, we don't care about that. But fundamentals are important. If the companies make profits, then the company share values will go up. We will be talking about some shares, and it's not my personal opinion. It's combination of various experts. They think that companies like Reliance, one thing we need to see, there are balance sheet risks even in companies like Reliance. Therefore, we have to look at specific sectors, specific companies. We cannot generalize that large cap companies are good and small cap companies are bad. We have to look into specifics. Like we're talking about Reliance, there's nothing wrong. But if you see for the last some time, there's not going to be a much difference as far as this P&L is concerned, because it has 10% of Nifty's weightage, right? 10-11%. Such a huge company, but they work on various sectors: energy, petrochemicals, oil, new energies, renewables. Considering all these factors, the Reliance will be able to do well in the long run. And over and above that, oil prices, other derivatives, all these factors are playing in its favor, and we can say there is a lot of safety in that particular stock. After that, we have to realize that this is a recession. During recession, the tech companies, IT companies have fallen by 3% in 1 week. And if you look at the last 1 year, they have fallen by 25%. People used to run behind IT companies, IT, 25% they have come down. Look at Tech Mahindra, where was 2000 and where is 1100, 1200? So IT companies' margin risks will be there. Even on Friday, you saw when all the other sectors went up, IT went down because it was downgraded. Not one. JP Morgan, they also downgraded. They said there will be revenue headwinds, bottom line problems. Look at Tech Mahindra, such a big company, but they have given such a big loss. 2000 stock has come down to 1100. So these things are very, very sector specific, very company specific, and one has to tread very, very carefully, especially as far as the investment decision is concerned. Nobody in the world can time the market, very difficult. But after all is said and done, people are asking this question, whether to keep the stock or sell. If you ask me a question, is there a probability for the market to go down? Absolutely it will go down, because in one of my earlier videos I said it can come down to 14,500 also, it can come down to 15,000 also. Nobody can time the market. I can only advise that please maintain the status quo, because market will keep on going up and down, up and down. We are not going to look at the next week or the week after next or the next month. We have to look long term. We have to look at the next 1 year, 2 year and 3. Those people who are in the stock market keeping long term in mind, they will be successful. But those investors who come inside the market, make money from fluctuations, next week I will buy something now, sell next week. What if the stock doesn't come down, go up? I'm asking the probability, because whole stock market is about probability. Because when somebody asked me, what is the probability that it falls to 15,000? I said, yes, 50% probability. He was saying, I will sell the stock and after it goes down, I will buy the stocks. I told him, if I am saying probability of falling is 50%, it also means that probability of 50% is go up. If it goes up, whatever stocks you sold for cheap prices, when are you going to get those stocks back at the same price? Because when I say 50% fall, it also means 50% up. Therefore, it is necessary for us to keep long term in mind and then play the market accordingly. Therefore, maintaining the status quo is the best policy. Not to buy anything, not to sell anything, because the VIX is too much. Some days it is 20, some days it is 25. On one day it reaches 30 also, right? You have to be very careful. Just relax. And the same thing applies both for options as well as for equities. If it is going up, you don't have to be too happy. When it is going down, you shouldn't be too sad. Be indifferent. Observe the market like you sit in a cricket stadium and enjoy the game. Enjoy the game. Watch from outside. Whatever stocks you have, don't sell those. Keep sitting. But in the long run, markets have to go up. It cannot come down. Because we have come out from problems like Corona, guys. These things are nothing. Of course, it will take its own time. Therefore, don't study the market too much. Please do not do over analysis, because if you do over analysis, it leads to paralysis of analysis, right? Therefore, sit cool, sit tight, and just as you watch a cricket game and enjoy this game of stock market, whether it goes up, comes down, IT sector goes up, goes down, banking sector goes up, goes down. Watch the fun and keep waiting. Look at things from a long-term perspective, and whatever stocks you have in hand, every stock will give you profits, right? Be an optimist. I hope you like this video. In this channel, we will keep giving you this kind of information on stocks, and please subscribe and also press the notification bell, because whenever you come out with these kind of educative videos, you will automatically get notification and you can watch these videos. Our team is working hard. They're looking for footages, images. I am spending my time doing analysis during my non-training days, making this video. Please comment, because each of your comment is going to encourage us. And please keep watching our channel, subscribe to this channel, notify to this channel, put your comments, and please support us. And this is Dr. Sadasivam signing off till we meet again. Bye bye. Jai Hind.